guys, it's your girl Bella. How are you? So as you guys know, today is Fix My Credit Friday. Now if you are new to my channel, this is a segment where I take a question from one of my social media followers or one of my coaching clients and I feature my answer here on YouTube. Now over the last few months, I've been receiving a lot of questions from my audience about purchasing their first home. So I've decided to consolidate all of your questions and concerns and do a series of videos to help you in your journey to home ownership. Now, if you did miss the first two episodes, I'll actually link that in the description box below. Now, today is the third video of this series, and I will be talking about all the loan options you should consider as a first-time home buyer. Now, before I jump into this video, make sure to hit that subscribe button and the notification bell so you know my future videos are posted on YouTube. Now, as a first-time home buyer, the process itself can be very overwhelming. First, you want to make sure that you are selecting the right property that's a good fit for you and your family. And the second most important thing you want to make sure of is to select the correct loan option that's a right fit for your credit and your finances. So in today's video, I'm going to give you a few options that you should consider as a first-time home buyer. So the first loan option you can consider as a first-time home buyer is an FHA loan. Now this is a loan that is insured by the Federal Housing Administration, which is a U.S. government agency. Now because this product is insured by a government agency, private banks can issue these loans to individuals who have less than perfect credit, minimal funds for down payments, or low to moderate income. So for example, if you go to Citibank and take out an FHA loan to buy your home, the Federal Housing Administration is basically guaranteeing to Citibank that this loan will be repaid in the event that you stop paying on your mortgage and default on the loan. Now, the insurance on this loan is paid by you, the borrower, and it's called private mortgage insurance. Now, this is usually a few $100s depending upon how much you're borrowing from the bank, and it will be built into your monthly mortgage payments. Now, the other great thing about FHA loans are closing costs tend to be lower, interest rates are very competitive, and they allow higher debt to income ratios than what you will see with conventional loans. The main downside, though, to FHA loans are the private mortgage insurance that I mentioned earlier in the video will stay on there for the life of the loan. You can't get rid of it. But with the conventional mortgage, the PMI will fall off once you qualify. The next loan option you can consider as a first-time home buyer is an FHA 203K. Now, these are loans that people use to purchase fixer-uppers. Now, these loans have the same great terms as a traditional FHA, but it includes the purchase of the home as well as the cost of repairs and improvements. Now, the work that's going to be done on the home will not start until after you close on the loan, and those funds are set aside in an escrow account. Now, the contractor that you hire will get paid during the process as they hit certain milestones, so you don't have to worry about anyone getting paid up front and not finishing the work. So the next option you have as a first-time home buyer are loans issued by the USDA, which is the United States Department of Agriculture. Now they have loans with zero down payment options and very low interest rates, but they will only issue loans to purchase homes in very specific rural and suburban areas. So if you do decide to go this route, you do have two options. So the first option would be to go to a private bank that offers USDA loans. So this actually works similar to the FHA, where the private lender will issue the mortgage to you, but the USDA will guarantee the loan in the event you default on your mortgage. Now the second option would be to borrow money from the USDA directly, but they will only do this under very certain circumstances, primarily for very low income households. Now the income requirement does vary by region, so if you do want to learn more about this program, I'll put a link to that below. The next loan option I'm going to mention is specifically for active duty military personnel, veterans, members and reserves of the National Guard, as well as surviving spouses. You have the option to use a VA loan to purchase your first home. Now these are loans that are insured by the Department of Veterans Affairs, and they have very favorable lending terms, such as zero down payments, low closing costs, very competitive interest rates, and no private mortgage insurance required. Now, if you want to learn more about this program, I'll put a link to that below. So last but not least, many states also offer various loans and programs for first-time home buyers. So for example, I live in the state of New York, and there are various loan options for first-time home buyers under the Sony Mae program. Now, Sony Mae stands for the State of New York Mortgage Agency. Now, many of these loans offer low down payment, low interest rates, and also are good for people that have low to moderate income. And many of these programs also offer down payment assistance. Now, if you do live in the state of New York, I'll put a link to that in the description box below. But if you don't live in New York, I will also put a second link below so you can find out what programs are local to your area. Now, that's it, guys, for today's video. Now, as always, thank you so much for watching. Make sure to hit that like button if you did like this video, and don't forget to subscribe. All right, guys, talk to you soon. Bye.